Suppose you had a tool that indicated where major players place their money so that you could emulate them and earn the same profits. Well, you are in luck because today I will show you the most powerful smart money concepts indicator available on the TradingView platform. The tool is designed to show areas of high interest in buying and selling, as well as zones of consolidation or no-trade zones. In this in-depth video tutorial, I will give you a blueprint on how to turn this indicator into a profitable trading strategy, which will put you so far ahead of your competition. Are you ready? If so, hit that like button and subscribe to Trade IQ. It only takes a second. Without further ado, let's start the tutorial. Before we begin, I would like to emphasize that this technical analysis indicator can be used for trading highly volatile cryptocurrencies, stocks, and forex pairs. The most suitable time frames for this indicator are 5 and 15 minutes, 1 hour, and 4 hours. To install this indicator on your chart, simply log into your TradingView account and open any chart. Currently, I am viewing the Ethereum price chart on the 1-hour time frame. Open the indicators and search for Smart Money Breakouts by Chart Prime. This script is simple and easy to understand. It has multiple features that help analyze market prices on a deeper level. Watch how much clearer the chart appears with this tool enabled. We can see areas of high demand and high supply that result in a price increase or decrease. There is often a long-term trend formed by these initial price movements. This is where large financial institutions and banks place their orders. The Smart Money Breakouts indicator spots these orders very well. By using this tool, we will be able to enter the market early and be on the side of the major players. The indicator produces buy signals whenever the price forms a new swing high. If the previous high is broken for the first time after a downtrend, the indicator recognizes it as a change of character. If the high gets broken again after a change of character, the indicator marks it as a break of structure. Similarly, if the previous low is broken for the first time after an uptrend, the indicator identifies it as a change of character. If the low gets broken for the second time after a change of character, the indicator flags it as a break of structure. Some might argue that these two types of signals have different accuracy. This might be true. You see, a change of character is where the market trend switches from bullish to bearish or vice versa. This often occurs in a ranging market. Big players struggle to decide whether to increase or decrease the price. Hence, if you see a change in the character label, you should be more cautious about opening a trade. On the other hand, a break of structure label is an indication of a continuation trend that has already been established. This type of entry is safer. The indicator also displays market volume when a breakout occurs. It is shown in a form of a dot that has 3 colors: red, yellow, and green. A bullish breakout with a green or yellow dot is considered strong. If a red dot is present, the trade is not supported by volume. Exactly the opposite is true for bearish breakouts. The Smart Money Breakouts indicator shows areas of high buying and selling pressure, as well as consolidation periods. You can spot these areas easily by looking at the candle coloring. Another interesting feature of this indicator is the take-profit target price. For example, as soon as the buy alert is received, the indicator plots a target line above the current price. You can choose to follow it or set your own target. In the indicator settings, you can customize these parameters to make the indicator more or less sensitive to price movements. For example, you can change the swing length. This number affects signal accuracy. You can also select the breakout type and the target multiplier. Alright, so now we know how this indicator works and what its features are. Let's build a profitable trading strategy with the Smart Money Breakouts tool. For that, we'll need to add one more effective indicator to the chart. This indicator is called Volume-Based Support and Resistance by Tommy F. 1001. This indicator will take so much work off your shoulders. You will no longer need to manually draw key levels. In addition, this tool is multi-time frame, which means it spots key levels from higher time frames too. Before we proceed, let's open the indicator settings and disable all time frames except 4-hour ones. Let's make the zones more visible. Volume-based support and resistance is an indicator that combines the concepts of volume and support and resistance. It identifies support and resistance levels based on where significant trading volume has occurred in the past. You see, markets often remember price levels where a lot of trading activity has taken place. These levels can act as psychological barriers or points of interest for traders. A support or resistance level with high volume is often considered stronger than one with low volume. This is because the high volume indicates that many traders have bought or sold at that level in the past, making it a significant point of interest. If the price approaches a resistance level with increasing volume, it might indicate a potential breakout. Conversely, if the price approaches a support level with increasing volume, it might indicate a potential breakdown. Let's look at a practical example of how this indicator can be used in trading. One of the simplest ways of using volume-based support and resistance is looking for a breakout. When 4-hour resistance gets broken to the upside with a strong bullish candlestick, this indicates a dominance of buyers in the market. The chances the market will continue its bullish rally are very high at this point. The same is true when price drops below 4-hour support for the first time with a strong bearish candlestick. Another way to utilize this indicator is by looking for the price to retest the previously broken level. When support gets broken, it often becomes a new resistance. However, you should keep in mind the following. First, the breakout to the downside should be supported by strong momentum. Second, the price should pull back to a new resistance level slowly. This way, we increase our odds of a successful entry dramatically. Now let's combine the volume-based support and resistance indicator with the Smart Money Breakouts tool into one trading strategy. The strategy rules are simple. You buy when the following conditions are met. First, the price breaks above 4-hour resistance. Second, the Smart Money Breakout indicator gives a buy signal. Don't forget to check the volume on the breakout. That's it. We need to keep the rules simple. No need to overcomplicate things. It is recommended to place the stop loss below resistance and to set the target twice as high as the risk. You can take a partial profit once price reaches the indicator target. To sell the security with this strategy, you first need to wait for the price to break below 4-hour support. Once this happens, look for an immediate sell signal. Place the stop loss above the support level. Target 2 times the risk. Traders, I hope you understand this trading strategy. Make sure you do thorough testing on a demo account first. Get used to seeing these trade opportunities instantly. Only then should you try this method on a live account. Thanks for watching and see you in the next episode.